Hi, welcome to the Oak Trader Report on the 8th of December. Just wanted to cover a couple of the more fundamental charts in America because we're reaching quite a pivotal point, it seems, in the world at the moment concerning Europe, South America, Asia, and you've got America that's really standing out amongst all of those different continents, and the stock market is performing quite well. But that doesn't necessarily mean that the economy is performing quite well, i.e. people's wages not going up in terms with inflation. And if you look here on the US unemployment chart, you'll see here the figures down to 7%. But in reality, if you check out a site called Shadow Stats, if you do a search for them on Google, they correlate the statistics in a fundamental manner, where they use guidelines that were used by the government in the past, or they use guidelines where they don't cheat. And those are roughly the real figures, and that's the trouble when you work in a fundamental analysis. What are the real figures? 1 month GDP is up, and then 3 months later or 6 months later, the figure they gave you is revised down. So you can never be sure with fundamental information whether it's correct. But you can see here the unemployment rate was around 10% based on the guidelines that today's administration uses to measure unemployment. And if the guidelines they used back in the late 20s were used, the unemployment rate would have been just above 20%, I believe. And it's come back down to 7% here, and it looks to be in a steady downtrend. Most of these downtrends last for quite a long time. And it could be similar to this one. We just won't know until it flattens out. And you can see here, if you draw a line here, you can see where it kind of flattened out and the technical position of it changed. Similar to here, it flattened out, the technical position changed, but it carried on going down. So you've got to be not entirely convinced if the market does flatten out. That's the whole point about waiting to see. And if you sort of use this sideways area here, this bounce above it, that's proven to you that it's risen above the area where it is now. Whereas here, if you draw a line along the channel, from say this point onwards, this point, it never broke above the channel. And this move down confirmed perhaps that the maybe not as big a move down as it had, but it was heading downwards, or at least looking to consolidate that a little bit longer. But it can be quite a good signal when it does start to go flat. So when this very steep downtrend ends and it starts to go flat, that may be a signal of what's coming in the future. The 15-year fixed jumbo in America, if anyone doesn't know what a fixed jumbo is, it's for, I believe it's for $1 million mortgages and over. It's for people that are quite affluent, looking to secure mortgages on their property, or as we all know, to pay less tax. It's one of the ways the very wealthy pay less tax. They mortgage their properties and they use the money from the mortgage to spend, and that's obviously not taxable. It's a very good way, a very tax efficient way to make money. Warren Buffett knows quite a lot about it in terms of shares. But in terms of houses, you can operate for 20, 30, 40 years with that strategy without paying any tax at all. Just keep rolling over, and a lot of people do it in America, and there's a lot of debate to whether it's fair or not. But you can see here that the people have been enjoying outstandingly low rates. The prices have come down, but if you notice here, the market has flattened out, and it's touching the 3.5 level here, which is still a very reasonable rate for a 15-year fixed mortgage, 3.5%. And if you look at it in terms of fixing anything, I always think it's a terrible idea, 30-year fixed mortgages, 15-year fixed mortgages. I'm just always worried that they're going to unravel at some point. The amount of offsetting that they need to do to fix something like that for a 15 or 30-year period is ridiculous, and one day perhaps it will unravel. A very good book, and I read it about 15 years ago, Richard Thompson, called Apocalypse Roulette. For anyone who's interested in that side of the market, financial derivatives. This guy was writing about it back in 1996, talking about all the derivatives and how they fix these markets longer term and how it will unravel in the future. And he's proved to be very right over the ensuing years. And a lot of people think it's all over, but in terms of derivatives, they're still out there. There's nothing so much wrong with derivatives in themselves, but when you start getting too complicated, for example, like this 15-year fixed jumbo mortgage, you can run into problems later on down the track, and we may well see that in America. And you can see here it's steadied out, and we'll just have to watch this to see what happens, but it looks like it's flattening out here. Who knows how long it will flatten out for, but here's the point to watch it, I believe. This, where my mouse is, if it can rise above that with this move here, that means I believe that interest rates will be heading higher. But it's quite a good game, really. They go and get the Federal Reserve fund rates, they go and secure funds at 0.15%, 0.30%, and then go and lend it to someone with outstanding credit who's got assets, and they get 3.5%. I mean, it's a fantastic arbitrage. It's a license to print money, having access to the federal funds markets. Here's the house price index from back from 1989. You can see the huge run, the expansion of money, inflation, and you can see the correction that happened. And look how severe the correction was felt in the mainstream economy. But in reality, in terms of the overall average, prices haven't really come down that much. But it does look to have flattened out here, and you can see that the market has gone sideways a bit, and we could see this market steady out or move higher from here. This is more of a fundamental chart based on information that really probably isn't 100% factual, so it's very hard to make any sort of authoritative decision on which way the US housing market will go long term. One would suspect that the politicians and the government will do everything they can to keep pushing and pumping it as best as they can, but prices sooner or later will have to settle down, because wages aren't rising in conjunction with house prices, and at the moment that could, not at the moment, but it could affect the market in the average to medium term. And the yields in American properties were very good a year to 2 years ago when I was looking at them down in Florida, down in Atlanta, Georgia, different markets, and pretty much the yields, and it's all down to potential, because if you can't rent, then all your workings out mean nothing. But most of the time in the Florida holiday rental market, friends are yielding around 12 to 15%. Some of the ones that didn't hunt around for the best deals are yielding 7 to 8%, so it's an extremely good return on your money when you compare it to almost the negative returns when you factor in inflation that you're getting from interest rates with banks. And of course the policymakers and the government know this, and they're trying to turn everyone into speculators by reducing fixed interest, which we'll see in a little bit. This is the fear index, the S&P 500 VIX, nicknamed the fear index. You can see back with the crisis in 2007, 2008, the massive spike up in prices, coming down, breaks the downtrend, spikes up, breaks the downtrend, spikes up, breaks the downtrend here, and is a laggard. And it looks to be going sideways here. Who knows, this could go sideways like this market did for another year or two. You just can't tell, and you can't prejudge sometimes without price action, but these signals can give you a little clue, like the US unemployment rate. Once that starts to flatten out in terms of getting worse, that can give you a little clue about the market getting ready to sell off. And it's the same with the VIX as well. At some points it can give you a little clue as to when the main market will be coming down. But here at the moment it looks like it's basing and flatlining, and we could see at some point, I would say, if you ignore these spikes, one here, here, if you draw a line along here, once it breaks that uptrend, we could see quite a violent spike on the upside. At some point the market will have to correct, and it's worrying that it keeps going up so strong. Markets under normal behavior shouldn't rise so quickly. In terms of the Dow, if you look at it over a 4 to 5 year period, it's been quite an incredible run up from the bottoms of March 2009. This is the 30-year fixed. If you look here, draw a line, big downtrends being broken here, and you can see the market spiking up. When it usually spikes up like this, it may mean it comes back down from here, but I think you can see here that over the years interest rates in all markets have been depreciating in terms of the yields they pay. It won't last forever, and that's one thing you can be assured of, that some point in the next 2, 3, 5, 10 years, who knows, maybe even sooner, we're going to see much higher interest rates all around the world. The federal funds, you can see the manipulation of the market by the Fed at these low levels, and it's baselining. Of course, there's only one way to go from here, unless they enacted what they did in Sweden. I believe it was in Sweden when they had the banking crisis in the mid-90s, and they went into negative interest rates to force banks to borrow to speculate. I doubt we'll see that from the Fed, but you never know how desperate they may get. They are getting backed into a corner, and the longer they hold interest rates down here, the longer bubbles will exist in certain segments of the market, and the longer it will take for the normal market to correct itself. So at any point in the near future, I believe interest rates will rise. That's really a non-meaning statement, but that's the world of finance these days. You can't really make an authoritative statement. The only authoritative statement I could make here is that in the next 2 to 5 years to 10 years, I can see interest rates being much higher than where they are now. If you draw a long line down here, we'll see them break 3%, and more than likely we'll see them at the 7 to 8 to 9% levels in the next 10 years at some point. And that's one thing I feel assured will happen. We just don't know how long interest rates are going to be this low for this long, and it's not natural that they are as well. The economy still grew and expanded, and humans still prospered when interest rates were at a normal level, and savers were receiving a decent yield on what they've worked hard for all their lives, where at the moment the people that have worked hard all their lives with savings in the bank with fixed interest rates are getting absolutely nothing. That won't last forever, and the status quo, as always with the wind, won't blow in one direction forever. This is what I was referring to earlier about yields being less and less over the years. A systematic, nationwide, worldwide policy really of reducing yields in main Western markets. Corporate bonds here, AAA Moody's, and as we all know, AAA Moody's doesn't really stand for much. And again, that's going back to the debate, fundamental analysis versus technical. For me, if I had a choice, one or the other, it would have to be technical analysis, hands down. There is some very useful bits and pieces of information that can be garnered from fundamental information, but overall, you just can't trust the numbers. And I like to see price action, because price action is real. You can't manipulate price action. Like a doctor, when he comes in the morning, he can get a report from the nurse about the patient in the evening, or he can look at a chart, and the chart will tell him the facts from the machines that are hooked up to the patient, whereas the nurse may be right, may be wrong. It's a similar circumstance with fundamental economic information, and there's so many manipulators out there check out deep capture, do a search for it on the internet, talking about price manipulation and naked short selling, and that's just the very very low class side. Excuse me, that's just the very low class side of price manipulation. That's not what the bigger guys do, but I think that sums it up pretty well, that document, Deep Capture, that talks about naked short selling in terms of the the hedge funds that are out there and the different market participants. They will try anything to move the market in their favour. But if you look at this chart here, massive downtrend, draw a line along the top of it, and you can see once it breaks that 5.25% level and it starts going sideways for a little bit, the technical position of the market will change and we'll start seeing high yields on corporate bonds. They can't get away with it forever. And again, the markets, it could come back down from here. We're living in manipulated times at the moment, and the people that are getting stitched up are the independent investors, speculators, savers. The institutions, the corporate companies are the ones that are benefiting at the moment from these low yields. Although banks do make more of a profit in a high interest rate environment, again, I think that's a little bit of a misdirection statement, because what can't you like about borrowing money at 0.15% and then borrowing it out the next day, to a billionaire that's got assets secured on the mortgage that you're about to give him at, say, 3.5%. There's nothing wrong with that business at all from the bank's eyes, and I'm sure in their opinion they're thinking long may it continue. The natural gas monthly chart here, you can see here that the steady uptrend of natural gas was broken here with the fracking boom that didn't necessarily come about unexpected to people that study and analyse the natural gas market. There's a difference between what I call fundamental sizzle information and the difference between reality. A guy on the ground, who's an expert in geography and the geology and all the different aspects of petroleum and gas, he could give you an insight to what was happening, and guys in the know knew exactly what was coming. And you could see with the spike up in charts, the distribution here, and then you've had the big downtrend in prices here, breaking at the back end of 2011, 2012. If you draw a line here, that steep downtrend was broken. You draw a line here, the trend's been broken, and it looks to now be in what I'd call a sideways trend between, say, 320 and 420. And natural gas, going on to the fundamental side of the American economy, this really could be a saviour, in terms of reducing your manufacturing costs over the next 10 to 15 years. And when you compare that against, manufacturers in Holland, Japan, Switzerland, American companies have a huge advantage because of energy costs. And with the low dollar where it is now, of course the dollar may go higher over the next 6 months or a year, but in terms of the dollar gaining a lot of strength, who knows, it may well do, but it should still be low in comparison to where it was, say, 15 odd years ago, for quite a while, and this should benefit American manufacturers, especially with the cheap manufacturing costs, the energy costs in America. If you compare them to the costs in Japan, the costs in Japan are about 300 to 400% higher. High grade copper, 5-year weekly. It looks to me on a longer term here that the market here failed to reach that high here, and of course this was at the top of the, I wouldn't call it a commodity bubble. In some instances, in some commodities it was, but most commodities topped out roughly around this time. And you can see the distribution here, a lower high there, and then it comes back down. It has a move back up, and it fails to reach these highs. Each high is significantly lower than the previous high, again here, and to me that's a longer term sign of weakness. If you're watching the market too closely, it's not too easy to see that. and sometimes it can look like strength. But if you take a step back and look at it, each rally failed to move above the previous one. To me, common sense tells me, the picture may change in the next couple of months, who knows, but to me that tells me that people have been distributing the contracts that they've held over quite a long period of time. And also the physical commodities like copper, which is being stored in warehouses all around the world. The only thing on the positive side here, you've had a double bottom multi-year apart, which is showing a bit of strength. You've had a broken downtrend here. These trends aren't broken, and it does look okay, but it's dipped below this consolidation area here. To me, I'm 70% bearish on this. Shorter term, maybe it might have a spike up, and we could see it hit. If you draw a line along here, a rough line as always, it may hit the 340 level again, or it may even push up to the 360 level, but I think that would be a false move, and the main trend would be to go down. And I'll show you a monthly chart just to show you why I'm thinking that. But again, I could be wrong, and that's why I prefer stocks, because I can feel a lot more confident about taking a position in stocks when I'm looking at a longer term flat line, compared to something like a commodity and looking to short sell it as well. But to me, longer term, it's definitely looking more bearish. And if you look at it on the monthly chart here, you can see where you've had a beautiful flat line. You draw a line here back in 96, you draw a line all the way down to 2003, where the technical picture of the market changed. Instead of going down, it was going sideways. And this is a beautiful flat line here, flat top triangle. You ever see one of these again in the commodity markets? It's such a shame. An account I had before, I was doing really well in different markets, and I blew myself up, the account that is, and literally I was watching this without any real funds to participate. It's always the way sometimes, sod's law. I remember it back in the day, wishing I'd had funds to participate in it, and I didn't. But if you ever see that type of formation again after this type of downtrend in the market, bet the farm. It looks fantastic. And then you see the market technical position breaking out of the longer term baseline, moving up above the 140 level, making a new high. And then here just the parabolic move upwards, and then the distribution, and then the shakeout during the recession of 2008. And then we had the very, very quick return of copper. And this is why I feel that this is distribution, because now this was a huge accumulation cycle, so there was a lot of contracts to distribute, but this is quite a long distribution cycle, and the public were up for it in 2007. They were buying ETFs, and there was all sorts of promotional pieces on Batista Ike Batista in Brazil, and about his super port, and how there's going to be thousands of ships shipping commodities to China at the new super highway. And it was just a lot of bubble talk in commodities, and so I would suspect that they distributed a lot, but some of them were caught with their pants down and didn't manage to distribute what they could. And then you've obviously had the Chinese influence. The Chinese like using copper as a collateral in loan sharking operations, because there is still that not underground element we use in the West, but I wouldn't call it an underground, it's just the community element of borrowing money, whereas the businessman will go to the guy down the road and say to him, look, I've got 100 tons of copper, will you borrow me say $5,000, and the guy takes the copper as collateral. So there's a lot of those types of deals in China, and who knows how much copper is stored over there based on collateral loans. But again, that was one of the reasons it became quite popular as well. But I think this is definite distribution here. Again, we're in uncharted territory in terms of debasing of currencies. So when I talked about the US dollar before, if there was a debasement again of the US dollar, which I don't think will happen for a good couple of years, if indeed it does happen. But again, if that was to happen, you could see another spike up in copper prices. But to me, the probabilities are saying 70%. This is a longer term distribution triangle. There were some beautiful charts like this in 1929, 1930s. If you look at some of the monthly stock charts from back in the day, some of them had great distribution triangles that look exactly like this. And we should see the market come down to 3 if it indeed the case, and break down lower. And we can see, if we draw a line here, the long-term average, if it is to stay in the uptrend, the downtrend may stop at around the 220 level. And if it did stop at the 220 level, it would still be much higher than it was back in 2001, 2002. This market has been extremely buoyant, for good reasons. But if anyone's ever been to China, I think they've built all they need to there for the next 5 or 6 years. I don't think they need to build much more. But then you do look at the ASEAN region, Cambodia, Myanmar, Laos. They not forget about Laos. They won't even allow development in the country. But those 2 other countries I mentioned, Myanmar and Cambodia, and even Thailand to some respects, they could boom. There's a lot of emerging markets like Colombia, Peru, Bolivia, perhaps the Ukraine if it gets its house in order one day. So there could be demand for copper in the future. So maybe it won't last forever, but I tend to think that this bull run, for what it's worth, it could be a longer term correction, but I think that it will correct to 220 at least. And again, that's more of a speculative bet. I'd much prefer to be in a longer term stock with a nice looking long term picture. But I might, in the next couple of weeks, look to take a short position in copper, see how the price action develops. But this definitely looks like a longer term distribution triangle. The smarter players are selling out from what they bought here and here. And sometimes you might think, well, how the hell are they selling out from where they bought here? It's not necessarily futures contracts they're selling out of. It could be physical positions in the market. And a lot of investment banks like Goldman Sachs and JP Morgan, they were really up to some nefarious activities. UBS, they were actually buying commodity warehouses full of aluminium and copper, and delaying delivery of them, and just playing silly buggers and pushing up prices, manipulating prices. I'm happy to say that because the evidence is there that that's what they were doing. And they're still involved in the market. Who knows how long that will continue. I know they've been divesting out of those particular markets. I think they got a telling off from various authorities and told to quietly divest, but some of them are still involved in those markets. And some of the activities that went on in the copper market when it was reaching its peak, with delaying of copper shipments out of warehouses, and you look at who owns the warehouse and it's like UBS or Goldman Sachs. It's just a completely corrupted market in some respects. That's why I do like the cattle markets in terms of commodities. I think they're the only real true market that's left, and maybe the wheat and soybeans market, but definitely live cattle, lean hogs, feeder cattle, they're true trading markets. Whereas copper, you've got all those nasty manipulators in the market as well. But this looks to be distribution to me and heading lower. EU unemployment, while the American unemployment has been going down, supposedly based on their figures, the EU unemployment figures have been going up. The average now is 12%, just over, in the EU, and interest rates are record lows. But the Germans have resisted. They've resisted debasing the euro. They've been probably the one sane voice in the whole world while it was going through a crisis. Okay, they've done certain things that don't adhere to some principles, but in terms of not bowing to the pressure, in terms of recently the Americans telling them off for being, saving too much, not spending enough, that type of thing. I mean, we should all really be trying to model our economy on the best parts of the German economy. They've done really well since the Berlin Wall fell down, and they've got their house in order, and it paid off for them. And I think a lot of different countries in the world could look at how Germany runs its ship. And not to say that everything's perfect there, but you take the best bits out of what they're doing. And if America could do that, once Obama and the Democrats probably lose the next election, because it just looks like it's being set up for that. You've got a huge spike in prices at some point. The market's going to come down, and during the election year, maybe he'll suffer what Bush did, and that'll be the way to get him out of office. But the next person that comes along, if they can adopt some of the principles of what Germany are doing, America could have its next golden age again, if it can get its house in order. But the EU, there's nothing really much to say here, apart from there's some great companies in Holland, Switzerland, Belgium. There's great companies all over the EU, and personally, longer term, I don't know whether the EU will stay together, but people always talk about unions, and if you look at the United Kingdom, that's a union, and that stayed together for over 100 years. You've got Northern Ireland, Scotland, Wales, and England, although Scotland are looking to become independent soon. So sometimes unions can last for quite a long time. If you look at the mainstream newspapers, they say that unions always break apart, and that, in retrospect they do, but how long, before they break apart? That they seem to be pretty serious with the federal Europe. They seem to have got what they needed to sorted out, and the public seem to have bought into it in terms of they can't do anything about it to stop it. I mean, I believe on the last count, 80% of the laws now in the United Kingdom are set in Europe. Now, of course, we have in the United Kingdom elected European representatives that go over and sit in the federal building over there in Belgium. But a lot of people feel that there isn't any transparency there. The accounts of the EU, I'm not sure if they've had their accounts signed off in the last couple of years, but I know 2 years ago they hadn't had their accounts signed off for 10 years. I mean, there was bits of paper there. I was talking to one accountant who was saying that there was a $5.4 million dollar receipt from someone in the Czech Republic, and people had put it through the books on the EU account. I mean, it was just a plain A4 bit of paper with someone's signature on it, $5.4 million. I mean, it was just riddled with receipts. So there's huge corruption that's gone on over the last 10 to 12 years. Who knows how it will all pan out, this social experiment, but one would think that it will go on for a few more years yet. All those people that were saying that the euro is going to self-destruct and won't be around, I think maybe in for a little bit of a shock, and it might still be around in a decade, 20, 30 years, and it could still be around in 100 years, and it's a good alternative to the American dollar. It's not good for the world just to rely on one main currency. I just wanted to show you this chart here of the SET index, the main index in Thailand. They've been having quite a few demonstrations recently. I visit Thailand all the time, being in the area, Hong Kong as well. This is a great website done by a hobbyist. He runs a goat farm in Thailand. It's called asiachart.com, and he puts together some fantastic charts. And just looking here, it's been in a nice steady uptrend here. You've had the demonstrations and various other things, the floods, the tsunamis. Thailand's a very resilient economy, and it looks like the market's dipping down here. But I just wanted to introduce you to that website. He's got some charts on there of American markets, Australian, Malaysian. It's a very good website, and I think you should check it out. and that's a picture from the demonstrations in Thailand. And I would estimate, uh, you know, over the course of 10 to 15 days, there's been at least a couple of million people, if you count them all together over the days of protest, that have come out on the street to protest against the Prime Minister. She's a lady called Yingluck Shinawatra. Her brother is a fugitive from Thai justice, and every time there's elections in Thailand, he backs a prime minister and he gets elected, and then the people aren't happy about it because they see him as a puppet of Thaksin Shinawatra, who's a fugitive who's living in Dubai, and his sister got into power a year and a half back. And a lot of the Thai people, if you read the mainstream press, it's the middle class and the elites that are against Thaksin and his regime, so to speak, but that actually is not true at all. There's a lot of very normal people, poor people in the south of Thailand, in the centre of Thailand, that are against supposedly the democratically elected government of Yingluck Shinawatra. So it'll be interesting to see how it all pans out, but I have to say I've been very impressed with how democracy works in Thailand. A lot of people may stand back and laugh at that comment. A lot of the expats that live in Thailand, they don't really understand, what or how democracy should operate. These people are coming out on the street protesting because they feel that the person who's the prime minister is a puppet of someone who's in Dubai, and that is democracy. There's a lot of people in America, libertarians, right wing, left wing, that wished the populace would get out off their asses, stop complaining on the sofa, and get their point across to the government. And the Thai people do that. They're very good at doing that, and I wouldn't let that putting you off invest in the country. This type of thing, goes on in a country where people are allowed to express their opinions, and I've been very impressed with, how they've really been allowed to do that in the last 15-20 days, and I'll be interested to see how it all pans out. Okay, that's it for now, and I look forward to speaking to you soon. Take care for now.